And the company said, in terms of their target to deliver 1.8 million vehicles in 2023, they are still on track to do that.
We'll see about that.
Are you a little skeptical of demand for the triangular truck? Is that what I'm picking up there?
Yeah, BYD sold 431,000 EVs across the third quarter, and they were 3,456 EVs away from toppling Tesla as the world's biggest and best-selling EV.
Melissa, we are looking at 330 employees at Ford who will be laid off.
I think where Tesla has been so successful because of their ability to expand gig in terms of Shanghai, what they've been able to do from a price perspective, and the Chinese consumer, especially in the high end and rising middle class, they do want Teslas.
All that and more, so let's get to it. Tesla stock down in the pre-market today, sitting at $249.87. A lot of chatter in the news media about Tesla's Q3 miss. October 2nd, 5 a.m., took a huge dip, falling to $245.90. Despite the miss, Tesla then rebounded back to its current levels. Maybe the market just didn't care what the analysts had to say today. What did the analysts say?
Let's welcome in Jeff Pierce. He's Senior Manager of Derivatives of Trading at Charles Schwab. Jeff, we want to focus on the car companies. We know that the latest delivery numbers are coming out for Tesla. If they've not already come out, have they come out, and what do you have to report to us now?
Yes, Tesla has released their numbers. We're seeing the stock down just over 2% after they came up shy of expectations. On the delivery side for Q3, Tesla came in at 435,059 vehicles. That's down from the Q2 466,000, so down about 31,000 vehicles altogether. Total production for Q3 came in at 430,488. That's down about 49,000 from what we saw in Q2. Now, some of this was expected. The decline we're seeing here is in part because they had shut down some factories, which they let us know they were going to do. They did that in preparation for the updated Model 3 and the Cybertruck. If we look at some of the past delivery numbers from last year, we're certainly up year over year. And the company said, in terms of their target to deliver 1.8 million vehicles in 2023, they are still on track to do that.
Still on track to do that. And you noted that they did have to shut down those factories. We're looking at, did they actually shut down the Austin and Berlin factories during the time, or was it a system-wide shutdown?
Yes, those are the two factories that they pointed to for shutdown in order to get them prepared for the new vehicles. We've also, of course, in terms of the deliveries numbers, we've seen Tesla really cut prices over the last year several times. The market in terms of EVs have been very competitive. There have been some investors out there and analysts that have questioned some of these price cuts, but Tesla's pointed to it really driving demand. They've also, been able to make these cars available to those federal tax credits that we see that tends to drive some of that demand out there. Earnings are coming in October on the 18th after the bell. I think we're going to hear a lot more about this information on that day.
Now, there's a good shot of the impact Tesla's Q3 delivery numbers had on the stock market. Listen, 435,000 vehicles is nothing to sneeze at, especially when the company has already told you that they're going to have to pause production to retool factories. That dip right there just tells me the ignorance that is baked into the stock market.
Tesla shipping more than 435,000 vehicles last quarter, but that was weaker than analysts had anticipated. Factory upgrades forcing some production to be halted in the last 3 months. Despite the miss, Tesla maintaining its full-year forecast for deliveries at around 1.8 million. Also, Rivian surprising Wall Street with better than expected numbers. Deliveries there jumping more than 140% from a year ago, now topping 15,000. It still has a long way to go to catch up with Tesla or some of the other truck makers that are out there. Rivian, interestingly, today is down 3%. There seemed to be some concern over that company's forecast. Perhaps that's what's going on here. The full year delivery outlook missing analyst estimates. And also interesting that, there was a lot of anticipation that Tesla's deliveries were not going to be great.
Yeah.
So perhaps just not a huge surprise here that it did come out and do that.
Exactly right. I think on Tesla, there wasn't high hopes here, high expectations, because there were these downtimes at their factories, specifically Austin and Shanghai. As you noted, importantly, guidance, they're holding steady there. 2023 volume target still around 1.8 million vehicles. So that's unchanged. The team at Wedbush actually thinks the factory downtime likely means, by their math, 20,000 units shift to Q4, but obviously we'll find out when they report earnings on October 18th.
Let's take a look at the ramifications of that. 20,000 units shift to Q4. Q3 expected to be significantly lower, but going into Q4, I expect the numbers to exceed that of Q2 by a significant margin. I personally want to see Tesla hit 500,000 EVs produced in just Q4, which would allow them to hit their 1.8 million vehicles delivered. Huge win. But if they can hit that 2 million number, you bet your ass, cash register, there's an opportunity there. But let's not get ahead of ourselves.
The other themes that I've seen a lot of analysts chatter about today is the margin figure at Tesla. There are a lot of questions around going forward. Are we going to see a little more pricing firmness and stability when it comes to Tesla? And is that also going to have good implications for gross margins? That's one of the biggest questions for them, it feels like.
And the Cybertruck as well.
The Cybertruck, which they talked about maybe coming in the third quarter. Well, guess what?
That is
third quarter's done.
Yeah,
I thought we were going to be talking about the margins. I guess Cybertruck trumps the margin conversation.
Which is, there we go. There's your triangular shaped truck. There was the expectation for Q3. That has come and gone. So, and listen, that is very important if you're an investor, if you're a Tesla bull, because you see there on the screen, the bulls think that truck, they're counting on that as a tailwind for next year.
Are they though? The ramp of the Cybertruck is going to be painfully slow for those that are expecting 2024 to be the year of the Cybertruck. No, it's going to take a minute. Rivian, Ford, GM, they better hope that's the case, because no matter how reductive this guy gets calling this a triangular truck, the fact of the matter is this is going to have more technology in it than any of the Tesla vehicles. This is going to break the mold of what people can expect from a computer on wheels. Scratch that. A heavy-duty computer on wheels.
We'll see about that.
Are you a little skeptical of demand for the triangular truck? Is that what I'm picking up there?
I'm skeptical. I mean, they've had a lot of engineering issues with it, reportedly. It's a heavy truck. It's made of stainless steel. And so there are a lot of engineering issues. Aesthetically, it's not for me. But
it's not for me either. But you know what, Julie Hyman, maybe we're the outliers. We're going to find out. Maybe.
I don't know. At that price tag, I don't know how many people can afford it who would like it. But
what price tag? Do you have something? Are you able to configure your Cybertruck, Julie? Because let a brother know. I'm sure that would draw a huge number of eyeballs if you could tell me the price of the Cybertruck.
Just very quickly, we also got the Chinese automakers reporting deliveries as well. When you talk about competition for Tesla, particularly in China, it's coming from the homegrown automakers. So we had Li Auto, XPeng, and some of the others, NIO, also reporting their numbers. They're all trading lower in the wake of reporting that. And, obviously a lot of attention focused on China. The Chinese markets are closed, by the way, we should mention, for a holiday week. So these guys trade in the U.S., but they're not trading in China at the moment.
And of course, there, to bring back to Tesla, we know the price cutting game, because Elon's been very upfront about his strategy, right? Volume, even at the expense of profit margins.
Yes.
First of all, let's get to the nuts and bolts of it. How did BYD do?
Yeah, BYD sold 431,000 EVs across the third quarter, and they were 3,456 EVs away from toppling Tesla as the world's biggest and best-selling EV brands. So they were very, very close, and it's a culmination of many, many things over the years. And in recent years, that investment, that push with new factories coming online, with a great push in China and globally, and also releasing a lot of new models at vastly different price points, they're able to get to this stage where they're now so close to toppling Tesla.
That's the goal, folks. You want to be the #1 seller in battery electric vehicles. And this would have been the quarter to do so. But let's get serious. Tesla is very efficient when it comes to producing vehicles. You have refreshed Model 3s, Model Y hitting the streets in China. I never expected for Tesla to consume the entire Chinese market, but those that are in the know who want the highest performance, highest safety, the freshest software that can be updated over the air, they will choose the Tesla. As Coach Boone would say, it's like Novocaine, just give it time.
When then? When can it overtake Tesla?
I'll go ahead and field this question. If an asteroid hits the Chinese factory and then does a boomerang type like action and smashes right into the Austin factory, then and only then will BYD be able to overtake Tesla.
This is a really, really big question. We have one expert who follows the EV industry says, or told me rather, that this could happen as soon as the next quarter. At the moment, you're still more likely looking at into 2024 before BYD overtakes Tesla in this pure EV sales when you look at them like for like. But with Tesla having that bit of a blip in the third quarter, they're more likely to get back on a more normal trajectory in the fourth. Though BYD is also going to be following with increasing sales, it really does remain a question whether they can match Tesla and exceed in that fourth quarter as soon as that time.
So you're saying there's a chance? Good luck.
Melissa, we are looking at 330 employees at Ford who will be laid off either starting on September 30th, they were laid off, or on October 7th or 2nd, which would be tomorrow. These are employees who are at the Chicago stamping plant or at the Lima, Ohio engine facility. The reason why? Parts are not needed since the Chicago final assembly plant is on strike, and that's the plant where they build the Explorer as well as the Lincoln Aviator. So when you look at those two facilities, doesn't sound like a huge amount of jobs, 330, but this is now 930 altogether that Ford has had to lay off between these two facilities as well as the Wayne final assembly plant after the strike was called there 2 weeks ago. And this is a case where Ford is saying we have to lay these employees off because the parts that they would normally make that would go into production in a particular facility, they're not needed because that facility is on strike right now. So another 330 jobs where the employees are laid off at Ford. Melissa, back to you.
Phil, thanks. Phil LeBeau. And of course, there are ripple effects. You don't need parts. You don't need the stuff that make the parts, like steel and other metals. So it goes on and on and on.
Well, this just seems very political, trying to foment dissent among the rank and file of, well, we're getting hit because of this. Is this really what we want? I mean, it doesn't bode for a quick resolution, I don't think. Just ratchets up the pressure. I don't know.
Them's the breaks, folks. But don't get it twisted. If the UAW succeeds in their demands, the rewards should bleed through those that aren't even in the UAW. But, I mean, if you ain't got no job, you ain't got no job. What the that gonna do for me, right? Oh, this strike will be resolved. I just don't know when.
Let's bring in Dan Ives, Managing Director of Equity Research with Wedbush Securities. Great to see you.
Yeah, great to be here.
Very, very busy times. I mean, you don't even know which piece of this to start with, and you've been quite clear about how bad you think this strike is going to be for the big three if they get what they're demanding. Is there any way in which Tesla also comes out a loser here because its workers demand more? It tries to unionize them or something to that effect?
Don't worry, Dan. I got this one. I'll speak in plain English. No. Oh, you want me to elaborate? Tesla is one of the largest growth companies in the world. So if you end up working at Tesla, you'll be able to purchase one of the most popular stocks on the planet at an extreme discount. That alone is worth your weight in gold. The harder you work, the more money you make. And that's the best you could ever hope for.
Sure. I mean, there's always been a fear of unions at Tesla. I just see that as basically minimal probability that's going to ever happen. I think Tesla, it's a win-win situation because when you look at the big three, what's happening here, it's a debacle in Detroit because ultimately this is going to be passed to the consumer when eventually they do get a deal. And the EV strategy, I mean, this is a gut punch to borrow Farley what they've built over the years. And I think that's really the frustration right now in this Rubik's Cube, where I believe the UAW deal, if they took that, it would essentially impair the business models for us in the next decade.
For the Rubik's Cube? What the is Dan Ives talking about? Speak English, Dan. I agree with what Dan's saying. It will be catastrophic if the automakers accept this deal. Not catastrophic now, but catastrophic 5 to 7 years from now. Building battery electric vehicles is not a cheap endeavor. Making the process more expensive by paying workers more that you actually need less is indeed a recipe for disaster. And I'm not saying that the UAW doesn't deserve every cent that they get at this bargaining table. You'll just run the risk of the company filing for Chapter 11. And it won't matter what deal you've made because that company will no longer exist.
decade.
For the big three, that is, it will impair the business model because they'll be forced to pay so much more to the workforce that they will not be able to invest in the conversion to electric vehicles?
Exactly. I mean, if they actually sign this deal, I mean, these business models, the street would basically view it as an Everest-like uphill battle to ever be successful, because it's ultimately one hand tied behind their back. They're going up against non-union Tesla, non-union Rivian, foreign automakers, and that's why right now champagne on ice has been for Tesla in terms of the pending competition that's coming out of Detroit. And that's why this UAW, it's a nightmare on Elm Street in terms of what's happened in Detroit.
Why is it that Tesla's demand has been so soft? Is it simply that they've overproduced and they can't cut prices enough because there's just no pent-up demand additionally for EVs? And there's another, but why is it that those delivery numbers and that they have so much excess inventory right now? How long is it going to take for that to be absorbed?
And so we think it's really fourth quarter. I mean, if I look overall, take a step back, if you look at 1.8 million, what I believe is going to be deliveries for the year, that's a super strong number relative to the environment. I think margins trough, and Phil's talked about that as well. Q4, I think you have a Cybertruck that starts production, a refresh of Model 3, and I think in China, they actually start to gain more share. That's why, in our view, this is more of what I view as a pause into the next phase of the Tesla growth story, which is why we've been telling our investors here, you continue to own this name.
How did they go from not being able, a year ago, not being able to meet demand to the situation where they are right now?
Yeah,
what happened?
Look, demand definitely softened. We've seen that in China in terms of essentially a price war that's happened in China. But I believe the poker move of cutting prices, that was the right thing. I think we've seen it in the stock in terms of stimulating demand for Tesla. But no doubt, they are definitely going through a transition in terms of what we're seeing with demand in the U.S. globally. But if you look at scale and where we believe they could get to production, we're going to be looking at next year or two a company that's going to be 2.5 million, ultimately in the 3 million, what they're going to see from a delivery as well as a production. I think this is just, Tyler, in my opinion, this is just what I'll call the middle phases of the next phase of the Tesla growth story taking place.
Dan Ives has a problem with answering questions. So we're going to go back. I want to answer that guy's question.
How did they go from not being able, a year ago, not being able to meet demand to the situation where they are right now?
Their wait times were blown out. 9 months, 12 months, 15 months in some cases, in some regions around the world. Why is that? Because the demand exceeded the underwhelming level of production that Tesla was at a year ago. So to answer the question, they're making more cars globally. Giga Berlin, Giga Austin, Giga Shanghai, Fremont. Expansion of those factories to increase their production. So it's a balancing. The total addressable market will explode as soon as you drive the prices down. Those that could not afford a Tesla vehicle all of a sudden can. And that's with all the macroeconomic pressures that are being overlaid on the entire situation. Two things will happen. Tesla's ability to produce more vehicles going up while the prices of the Teslas continue to go down. This relationship will ultimately determine how demand is viewed across Tesla. The more they produce, the lower the average selling price of the vehicles must be to increase the total addressable market.
I wonder, though, about competing with BYD. I mean, they have more models. They update them more quickly. They have more colors. You know, it's already, Chinese models are like some of the top-selling vehicles in Europe already. They also have, what's the smaller one with the 4 letters? Anyway, it's not just BYD, which is formidable, but there's other Chinese automakers as well. And you read about these are not like, you know, low cost, cheap businesses. BYD is like, it's like the Japan of the 2020s in terms of the impact that Japanese automakers had on the market back then. So you do wonder if Tesla, even having an advantage to the big three, how does it not get undercut? And if they keep the Chinese cars out of this market, maybe it'll be fine, but how does it not get undercut?
Look, this is an arms race. I mean, this is a Game of Thrones that's going on, and you see what happened in China. I've seen it firsthand. BYD, NIO, Xpeng, and others. I mean, it's some of the best EVs out there. I think where Tesla has been so successful is because of their ability to expand gig in terms of Shanghai, what they've been able to do from a price perspective. And the Chinese consumer, especially in the high end or rising middle class, they do want Teslas. But to your point, do Chinese EV vehicles come here into the U.S.? ultimately that actually becomes the issue.
I don't know if you caught it, but Dan Ives has a great point within that mess of words he speaks. In China, the upper middle class, high class individuals, they want Teslas because they understand that the value that they bring exceeds what their prices are. When you start getting down to the lower middle, lower class individuals, BYD sells very cheap cars. Tesla is pushing for quantity while maintaining quality, whereas BYD don't give a shit. Oh, you'll buy this thing with less features, less functionality, as long as the price is under. We got you, bro. We got you. Tesla's not going to do that. But there is something Tesla will do that will change the game.
It seems the one missing plank for Tesla would be if they had a Model 2 or some kind of lower cost mass market car that could compete against the Chinese or just make it more affordable for a lot of Americans who might be tempted to switch. But that feels like it's just way off in the distance at this point.
Way off in the distance. I love hearing comments like that because it just shows the opportunity that lies in wait for investing in Tesla stock.
Distance at this point.
But I believe by the end of next year, a sub 30K vehicle is introduced by Musk, plus with Cybertruck. And that's why I just view this is in the early days, even with Supercharger and the sum of the parts. This is not an auto company. This is a disruptive technology company. That's why we're buying here, despite what I'll call definitely nothing right home about type of 3Q delivery number.
He ain't the only one, folks. In conclusion, Tesla's Q3 numbers are nothing to write home about. I guess when you compare it to other EV startups or even Tesla's top competitor BYD, they still dominated? I don't know. Q4 will tell the tale. Ford lays off about 300 workers. UAW doesn't want to work. I guess we don't need these jobs. One dangerous game of chicken. Well, Tesla can compete with the BYDs of the world. NIO, XPeng, Li Auto, Rivian. The Detroit 3 won't be so lucky. But I'm going to tell you right now, we won't be able to keep the Chinese vehicles from our shores. Tariffs, IRA, this is only meant to slow them down so that we can get our legacy auto manufacturers up to speed. This strike does not help with that. That's all I got for you today. Be easy. Peace.